So in this video, expect a practical demonstration of what corporate reporting actually entails. If you've been following, you will observe that we've done this video on corporate reporting and the expectation. Now we want to demonstrate what we've been talking about using GTCO financial statement. Using it is at random. It has nothing to do with whatsoever, please. And let's go into it without wasting any of our time. So we spoke about impairment of assets and its importance to be included in corporate reporting. Let's see now whether GTCO complies or not, and above all is a guide to what we should expect and what the institute actually expects of us, the knowledge that is expected of us to be demonstrating as chartered accountants. So we want to check on IAS 36 compliant now. We can look for any of these things which I mentioned in this above video, which you can look up if you have not yet seen it or part of us during that time, just like a week ago. Now, impairment losses, recoverable amount, and the like. Let's even check whether they have. So I'm going to quickly check now for impairment in this account. Whoa, they have much of it to be said about. The first one now, if you look at this place now, they say the group also recognized 94.9 billion as an impairment charge. You see, that is one. Ernst and Young, their auditor, equally flagged it impairment of loan and advances to customer. The determination of the adequacy of allowance for expected credit losses, blah blah blah. The group reported total gross loan of this and advancement of this, given the subject blah 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 blah. So allowance of impairment, whatever, blah, blah, blah. So you could see that the auditors even picked that aspect of IASs up for compliance or to be flagged whether they have concern about it or not. That is having knowledge of corporate reporting and reporting well corporately, both the narrative and the figurative side of corporate reporting. We can look at so many other things. Now let's move on to IAS 7. IAS 7 deals with cash flow statement. Let's check whether cash flow is even included first of all, and if cash flow is included, what aspect of cash flow, like the structure of cash flow that I told us about, that is part of the expectation for us to have as knowledge. You see, this is cash flow. They spoke about it in almost over 100 times. You see, cash flow statement. And I could remember during that video, I gave us like an assignment, the third section of that must be inside a cash flow statement. Now let's see the segments and their compliance. You see, the operating activity, that's cash flow from operating activity. Then we have cash flow from investing activity, and I gave us the third as an assignment, cash flow from finance activity. All these things we actually need to know and demonstrate it. And if you look at this, using one stone to kill so many birds, you will observe that the group reports for 2023, which is the year we are looking at now, and also they compare it in compliance to IAS 1 on presentation of financial statements, and they put side by side December 2022. This is a compliance to IAS 1 already. You understand? But we are not there yet. Let's pick it one after the other and move fast as soon as our You see, leg can take us now, or okay. Now, IAS 18, which is about revenue. Let's quickly demonstrate revenue recognition. This tells us how an organization made or make their revenue and how they recognize it. Anybody can just put any figure into into the financials. So that is one of the important reasons we need to know the revenue that is in an account. How do we arrive at it? Do they have anything to say about it? The answer is yes. It's still counting. The answer is yes. Fee income from providing management services. So management service income is what they are telling us how they recognize it. It's on the basis on percentage of opening net asset value of the pension, blah, blah, which is one of the subsidiary of GTCO. So we could see how they recognize different aspects of revenue. Revenue from contract with customer. You could see revenue recognition, which is telling us that they've complied with standard of presentation of accounting and what we would like to see, a shareholder and stakeholders will like to see in a financial statement to make their decision whether to invest in an organization or not, and so many other decisions that could follow. Presentation, which we've talked about, but let's quickly demonstrate it. IAS 1, I spoke about components of financial statements that we must understand it. And basically, there are four components of financial statements. What are they? They must have statement of comprehensive income. They must have statement of financial position. There must be what and there must be what. One is already dealt with. Okay, so I give it as an assignment for us.